Is Bitcoin about to break out to the upside or the downside? That is the ultimate question we'll be exploring today with Gareth Soloway, Chief Market Strategist at inthemoneystocks.com. Gareth, welcome back. Last time I saw you was on the other side of the world in Dubai. And here we are. We're back in studio. Welcome back to the show.
Hey, David. Thanks for having me back. And yeah, that was a good time in Dubai. No doubt about that.
Yeah, we had a good time. We had a good time. Now, let's talk about Bitcoin first. A couple of weeks ago when we were speaking there, Bitcoin had just reached a new high and, new highs again today. So the question people have is what's going to happen from here? Because we did talk about the $65,000 key level, which it has breached. You said that if it doesn't hit 65,000, we could potentially see a retracement all the way down to potentially, but not likely, but potentially 20,000. So that was sort of your downside target. But now that it has breached 65,000, is it just a straight shoot up to the upside to 100,000 perhaps, or do you see a different story?
So we don't know yet, and that's the simple but complex answer is that you did breach 65,000. So what that means is if you look at the chart here, you can see we pierced it here. We had a quick retrace. We pierced it a couple days, and then we've come back below it. So number one, what I was doing in the previous interviews is we were comparing it to past cycles, past 4-year cycles in Bitcoin, where you definitely saw this kind of retrace. In fact, let me bring up the charts. Here's the 2013 cycle, and you can see we had the high here. We retraced. We never took out that 1250 level like we did recently. So that what that means is it's different than the previous cycles. And if we go to this cycle, which was the 2017 cycle, same thing. You had a big drop, a big retrace, but you never took out 20,000 before it bottomed out. So what that tells us is that this cycle, it doesn't necessarily tell us that this isn't a cycle top, meaning it's still technically at double top resistance. It's still struggling around the April 2021 highs. But you can't, as a technical analyst, compare it to past cycles. You can't say, oh, this is exactly the same.
Right.
So as a technician, I have to look at that and I say, okay, I have to go back to the drawing board. This isn't like the past cycles. It may still be a top. Ultimately, I still believe that when a deleveraging event occurs in the stock market, you will see a significant decline. The question is, how low will that decline go? Just to put it in perspective, yesterday or 2 days ago, we saw a big drop in the stock market. And Bitcoin initially was up that day and ended up flushing, which shows that that deleveraging event, even as minor as it was in the stock market, did have an impact on Bitcoin. So I do want investors to be aware that if the stock market does start to come down, then likely it will take Bitcoin down in the short term, even though long term, I think it will do very, very well.
Mm-hmm. Let's talk about this price pattern that we've seen in 2013, 2017. I'd like to draw your attention to one minor difference that I've noticed, which is that in the past, when Bitcoin has hit a top, we've seen this double top pattern that you talked about, but the second top was always lower than the first top, right? 2013 and 2017. This time it's the reverse. The second top here is higher than the earlier top we saw in the springtime of this year. Does that mean anything to you?
And it very well may. I mean, so technically on a basis of the chart, you're still fighting that level. So you're still struggling, but you're right that this is the first time out of the last 2 cycles that we've made a higher high. So what I'm really following here is, can we really break above significantly this $65,000 high? The one concern I have is the highs recently have been made just as that Bitcoin ETF came out. And I do wonder if the hype around that got a few extra buyers in the space to push it above briefly that high. Again, on a technical basis, it's still struggling at double top. So I'm watching to see, but there's no doubt in my mind that you can't compare it now to past cycles.
True. So for somebody who is observing on the sidelines now, Gareth, should he get in or should he wait?
So I would wait to find out what it's doing here at the double top. The last thing an investor wants to do is jump in right at the highs. Like if double tops historically, whether they're stock charts or crypto charts, they can be significant highs before major moves to the downside. So the last thing an investor wants to do is put new capital without knowing for sure that this is a major break to the upside. Now, if it gets kind of above the recent highs and holds above 65,000 for a week or two, then yeah, I think it's going to at least 75 to 77,000. That's my next calculated resistance level. And then if it gets through that, you could see 100,000. I'm skeptical by year end, as a lot of people are saying, but obviously the charts will tell us what the direction is.
Well, you sound a little bit more bullish now, or at least more hopeful. I wouldn't use the word bullish, but more hopeful now than 2 weeks ago in Dubai. Actually, you
Yeah.
share the sentiment of a lot of people. I mean, most people in the cryptoverse, as I like to call it, are a lot more bullish than you. Actually, all the time. But now, in particular, you're seeing altcoins rise, right? You saw what happened with Ethereum, new all-time highs. Shiba Inu, I don't know if you read, but this guy, $8,000 he invested in Shiba Inu last year. Now the account is at 5.7 billion. I think he took profits a little bit, but that's still a crazy
Yeah.
return. Probably the best trade of all time. And then we got things like Squid Game coin, which spiked up in one day and they got rug pulled and people lost a lot of money. So my
Yeah.
point is the alt space is also doing really well. It's not just Bitcoin. So there seems to be a lot of momentum in cryptos overall.
Yeah, and just keep an eye on the one thing I always want to put out to everyone viewing this is that, for me, it's all about the chart. So a lot of people rely on FOMO and emotion to look at where they think Bitcoin is going. For me, I just try to keep a logical sense about, okay, well, what is the chart telling me? So initially, before we got to 65,000, I had to say, okay, well, the likelihood is it's a repeat of the previous cycles, 4 years, 4 years, 4 years. It didn't get up to these highs. Now you could still see a drop off double top, but you can't say, okay, it's going to have the same sort of massive retrace that we saw in previous cycles because the charts don't necessarily match up. So it's a matter of really just letting the charts tell you what the likely probabilities are of the move versus you saying, oh, my gut tells me it's going to 1 million, so I'm just going to go with that.
Okay, I'd like to link this back to macro now. Bitcoin and the Federal Reserve. It's not a topic that we talk about a lot, but as Bitcoin matures into an asset class that institutional investors are playing into, I think it's important to link it back to some of the fundamentals. So, as you know, CPI numbers came in this week, hottest number on record since 1990. So the highest inflation reading we have had in 30 years. What does this mean for the crypto space? Does this do you consider cryptos an inflation hedge, as some people might say? Could Bitcoin climb even higher now that inflation seems to be running hot?
So the one awesome thing that I saw in Bitcoin was when that CPI number came out on this past Wednesday, right? I think it was Wednesday, is that we did see cryptocurrency shoot to the upside. You saw Bitcoin literally intraday take off for about 30 minutes to 40 minutes straight up. And that's very key for the long-term success of Bitcoin in terms of being a digital gold or a way to curb your exposure to inflation. So that was really positive. The only negative was that then the rise in interest rates because of the hot CPI caused kind of this sell-off in the stock market that eventually brought cryptocurrency back down. But I love seeing the reaction that makes it kind of the gold type play, where
Yeah.
again, I do believe that long-term it is the digital gold of the future.
Why do you think? Okay, so you said that the fall in the stock markets brought Bitcoin down a little bit. Why are they
Yeah.
correlated, do you think?
So there's no doubt that there's so much liquidity in the system and there's so much leverage. I mean, we know about people taking 20-to-1 leverage in the crypto markets, in the stock market. There's people that are using maximum margin. And what happens is it all bleeds through. So, like me, I have a cryptocurrency. In fact, I have a couple cryptocurrency accounts. I have stock trading accounts. If I were to get a margin call because the stock accounts drop significantly, I'm going to be more inclined to take money from my crypto account and move it over to my stock account to cover those margins. So it's all intertwined. Also, you have the fear factor, right? So
Yeah.
the stock market starts to decline. People say, okay, what are the riskiest assets? Where do I have to protect myself? Cryptocurrency is still on a short-term basis a risky asset to a lot of big players, and therefore it's going to create a little sell pressure there.
So if interest rates go up, what's going to happen to Bitcoin?
So if interest rates go up and the market sells sharply because of it, then ultimately I think Bitcoin comes down in the near term as it becomes more of a stable asset that protects against inflation. Now, right now you have a lot of this FOMO and hype in there that really skews the real price of Bitcoin, in my opinion. But eventually, as it matures and is taken on by pension funds and hedge funds and becomes that kind of thing that older Americans and other people around the world put in their investment accounts for retirement, it will take on a kind of a good quality asset in times of turbulence. But it just isn't there. It's not mature enough at this point.
It sounds to me, based on your description of past events, that Bitcoin is performing like a leveraged play on stocks, on the S&P and NASDAQ. I wouldn't, based on what you've described, I wouldn't buy Bitcoin to diversify away from my stocks. I would buy it to gain leverage. Is that a fair statement to make, or would you disagree?
Yeah, I mean, considering the Fed has pumped so much liquidity into this market that it all obviously bleeds over into cryptocurrency. I mean, it's all bubbles, right? The
Mhm.
markets are bubbles. Cryptocurrency is a bubbles. Even as much as I like long-term Bitcoin, I still think it's a bubble in the near term because there's so much liquidity into the system. So you're right about that. I think there is kind of a leveraged impact about, if the stock market goes up 1%, it's very likely that Bitcoin can go up 2 or 3 or 4% for that same sort of move of liquidity.
All right, one more question on Bitcoin and we'll move on. So actually, when you made the $20,000 call, now let's just clarify. Now, you didn't say it's going to happen right away. You just said it's possible that it could happen down the line. You gave a lot of people some hope because people waiting on the sidelines are thinking, yeah, it's going to go down to $20,000, my buying opportunity. But it
Yeah.
hasn't happened yet, Gareth. Are you still sticking to that, or are you changing your outlook?
You're right. So that's very important, right? So what I said was it'll see a 20,000 or even sub 20,000 handle when you see a deleveraging in the entire system. We
Mhm.
haven't seen that in the stock market yet, right? I mean, yeah, you've seen little pullbacks like on Wednesday off of the hot CPI, but we certainly haven't seen a 20% drawdown in the stock market. That'll be the real test. How low does it go when you see kind of a 1 month or 2 month period in the stock market where we lose 20% or 25%? And that's where I think the buying opportunity will be because people will sell cryptocurrency in panic as they get fearful of the stock market, liquidity crunch, margin calls. We have to be logical at those points and at those dips, pick it up for the longer term thesis. So, just to be clear, I'm not really long cryptocurrency right now. I'm still on the sidelines. I still am looking at the double top, but I will absolutely be looking to buy on key pullbacks at key levels.
Okay. So how would I describe your sentiment to somebody who has not seen your previous interviews with me? So how would are you neutral on Bitcoin? Are you more bullish than you were before? How do you feel overall?
Yeah, so right now with the double top on Bitcoin, I'm neutral to kind of a slight negative bias overall.
Okay.
I'm very skeptical with the liquidity in the system still needing to flush out. But again, longer term. So if we start to pull back off this 65,000 level, right? Let's say we get down below 60,000, I'm going to go from neutral to negative bias to full on bearish bias because again, that will prove to me that there's a double top here. All right. Now, over the longer term, we get down to 30,000, 20,000. I become a massive bull and I will be buying with, like I said, both hands and feet.
All right. All right. Well, and you gave an upside target of 75,000, I believe. So if it does go to that level, we'll follow up and see what happens then. Let's talk about stocks now because you're linking this back to stock slots. So yeah, you're right. So if the stock market does have a huge drawback or correction, whatever you want to call it, that could bleed into other risky assets like Bitcoin. So are we going to see that anytime soon?
Yeah, so number one is take a look at this chart on the spiders. This is how much I just love charts. They just make so much sense when you know where to draw the trend lines. And if you take a look at the spiders, you can draw this trend line that basically goes back to July of last year and it pivots all the pivot tops right along that level and then look at what we just hit about a week ago in the stock market. We touched that trend line. Since then it's been basically downside action on the S&P. So what I've been doing, and by the way, notice how that correlates with the recent Bitcoin high pivot as well, basically within a day or so of that high, and now Bitcoin's backed off as well. So again, for me, I'm just following this chart. It looks to me like we have more downside. If you look at the past pullback here, that was right off of that trend line. We had a pretty big correction. So I'm expecting further downside as well as expecting interest rates to be the catalyst for that. Now, flipping over to the NASDAQ 100, it's almost equally as beautiful of a chart. You have a long-term channel here. Notice we just hit and pierced the high end. And what happens to the NASDAQ 100? It comes back in beautifully. So right now, I'm basically playing these trend lines. I'm buying at the lows and shorting at the highs. And so right now, I am still short the NASDAQ 100, and I'm looking it to come back into the 360-ish level here, which would be the low end of that channel.
I'm just wondering now, when Bitcoin gains even more adoption in the future, if it does, do you see it competing with large indices like the S&P 500? Do you see it competing for its status as sort of a passive investment? A lot of people might buy the stock markets and just leave it there because over the long term, it's done very well. But if let's say people have the same view of Bitcoin, they might rotate capital away from traditional financial markets, would they not?
I think it will happen. Yeah, I think that you're going to see this become an asset class that is in every portfolio out there. So it will take some away from the S&P, the Nasdaq stocks, as well as a little bit from gold. And I even think it has already. Although gold is looking like it could break out here. We can touch on that chart in a minute. But yeah, you absolutely are going to see that over the longer term. What it has to do, number one, is you have to see some regulation in the space. You can't have this kind of Wild West out there where people can just see their accounts hacked in by someone from the outside and then their money is gone. So you have to see regulation in the space. And you also have to see it become a more mature asset with not such wild swings in it. Then you will get these pension funds to feel like they're confident enough to put some of their money in. That's where you get trillions into the space, and you will see the market cap of Bitcoin probably go towards 10 trillion.
How do you feel about valuations in the tech sector, for example, right now? Rivian IPO'd, largest IPO for a car company. I think it was $91 billion on the day of the IPO, and which was larger than GM's market cap, by the way. So you got a tech startup of not 100 years of history trading at, on the first day, larger than one of the most established, largest auto manufacturers in the world. How do you feel about that?
I mean, I've been a skeptic of the valuations of technology for a long time now. I think interest rates being as low as they have been makes money very free. So people are saying, okay, well, where do I go for a return? Can't go into bonds really and make 1%, or even in a CD and make 0.01%. So there's been a flush of money in that has created this bubble in equities. It all traces back to the Federal Reserve and their print money, push it into the system nonstop kind of thing. The question is now, are we seeing these higher inflation numbers? Like I even saw Biden make some comments like, one of the biggest things we're going to attack now is inflation. And I have to wonder if that could eventually spook the market, because are you going to see pressure being put on the Fed to act even more aggressively on interest rates to curb inflation? And then does that create an asset kind of deflation period where we see these assets come in? And when you see stocks like Microsoft trading at like 30 plus PEs, maybe I'm just old, but I remember the olden days where, a tech stock like Microsoft would trade at 15. And you just wonder if at some point we're going to see the sell-offs that will bring valuations back in line with historic levels.
I got to ask you, as a trader, are you even concerned about what the federal government or the Federal Reserve does at this point to combat, quote unquote, combat inflation? Let's take a look what happened in the past month alone. We've got the Fed announcing tapering later this month, not next year, but this month. They're going to start reducing their asset purchases of mortgage-backed securities and treasuries. Nothing happened in the markets. We've got the inflation number coming out this week. We had a little blip and then short recovery thereafter. So nothing substantial happened in the markets. It doesn't seem like the markets believe that any higher inflation reading or any sort of announcement on tapering is going to really matter.
Yeah, they don't. The Fed has lost so much credibility. It's remarkable. And in fact, when they put out that statement on tapering, they basically cushioned it with saying, yeah, we're going to start to taper here. But, if there's any blip on the screen, we can adjust it. We can back off. We can increase, the amount of stimulus that we're putting in. And that made the market feel like, hey, if there's any sort of correction of 10% in the markets, the Fed will just come in and print more money. I think it's reckless. I think it's insane. It makes me love gold even more, and metals, and eventually cryptocurrency. But that's what the Fed has done. The Fed is so scared about creating a drop in the stock market because it basically hurts their dual mandate, right? So you see a drop in the stock market, people have less money to spend, which means they buy less, which means companies have to lay off, which means that the dual mandate of having employment low, that gets out of whack. So I think, again, the Fed, this dual mandate has really screwed the Fed over in terms of what they have to pay attention to. You can't ask a parent to be the hard parent, which is strict, but then say, hey, but give them candy all the time, no matter what. It just doesn't work. And that's what the Fed has been tasked to do since 1977. And if you look at how interest rates have performed since 1977, they go down, they bounce a little bit, down, bounce, and they just keep going down. And so I think, again, it's a ridiculous scenario. I worry about the future of the system in the global picture, too, with all these other countries following suit.
Yeah, let's give just a recap of your presentation in Dubai for those of us who haven't seen that particular clip yet. So you were talking about the demise of the global central bank system as we know it today. What did you mean by that?
Well, again, the dual mandate came in, right? And the dual mandate said, so before 1977, the Federal Reserve basically had to just focus on making sure the money supply was proper, inflation was doing the right thing, and that was their only deal. So they could be the kind of the tough parent in the room, the strict parent, which is what the economy and what the monetary system needs. But in 1977, they got this dual mandate that said, well, now you also have to make sure that that unemployment stays low at the same time. Well, if you need employment to stay low, you have to have people have more money, so you have to push the market up. If you do what the hard, strict parent should do, which is be firm and raise interest rates, well, then unemployment's going to skyrocket. So you can't have it both ways. And this is the problem that is going to lead to the demise of the central bank system. Eventually, the central banks are just going to continue to print money. They're not going to be the strict parent because eventually you'll see a collapse in the market and they'll have to print even more. And eventually the system just kind of, in all, no better term, kind of blows up in terms of the monetary system. And you'll have to see a reboot. The Federal Reserve will no longer exist in their current form, in my opinion. And you'll have a redo of kind of a digital type asset, which will become the kind of the new dollar. I don't want to say dollar because I think the dollar will be diluted at that point, but you'll have some sort of reserve currency that emerges that'll have strict implications on how much can be printed on a yearly basis. So the government can't just print a ton and the Fed can't do it at all either. And that's what the people are going to demand. You already see it out there. You see this restlessness with inflation starting to soar. The middle class, the poor people are already starting to feel, 20% rises in all these different goods. It's starting to hurt, no doubt about it.
FedCoin. Is FedCoin that new currency you're talking about?
Anything that the Fed controls means that they can print it. So no, okay, I don't think so. I think whatever comes from this will have to be an independent thing with strict, in very much many ways, it'll be kind of like, a cryptocurrency that expands on a predetermined amount per year so that it can never be overly printed and basically create inflation.
It has to be decentralized or no?
I think the government will want it somewhat centralized, but not to the point where they're allowed to come out and say, hey, we're just going to print another trillion today. What's another trillion of this asset?
I mean, yeah, if you take a step back and think about how threatened the government must feel, I mean, for the first time in human history, we've got a large number of people around the world utilizing a new form of currency, a new form of money that has nothing to do with the government. I mean, it's basically like, you're the parent and I'm the child, and, you're trying to cut me off, but I have my other source of income. You just, you all of a sudden you don't have any power anymore.
Yeah, it's exactly like that. And it's like the parents have become the children in a way in terms of misbehaving. And the child is standing up now and saying, hey, listen, I'm old enough to know what's right and what's wrong, and I'm not going to put up with this. So I'm going to cut you guys off, and I have my own methods this way. And I think, honestly, in the long-term scheme of things, it's extremely healthy. Even though it's going to cause extreme hardships for a certain period of time, what comes from it will be kind of the new utopian situation.
Okay. Let's just tie it back into stocks and then very briefly on gold. So stock market, S&P 500, up or down by the end of the year, you think?
Down. I'm going against the Christmas rally. I think everyone's banking on it. I don't think it's going to happen. I think we see further downside as interest rates move towards 2%.
All right. Good enough. And gold, you said potential breakout. Let's talk about that.
Yeah. So you guys know I've been a hardcore bull on gold. I've been on here when gold's been pulling back sharply as interest rates were popping. I love showing this, how interest rates are now 1.5, 1.6 on the 10-year, and gold is starting to perform. One thing I've said to you guys out there is that if interest rates are rising because of inflation, if you look back to the 70s, gold actually outperformed. If you look at the last 20 to 30 years when there was no inflation, interest rates moving up actually hurt gold. Well, we're in the new situation or a repeat of the 70s and 80s, and gold is starting to move up. Look at this inverse head and shoulders here. You're right at the neckline. I think you're going to have a small pullback here for a couple days next week, and then I think you break out and you still head towards my target of 2,100. It was a year-end target. Even I'm kind of questioning if it has enough energy to get to 2,100 by the end of the year, but I think by the first quarter of 2022, you should see that.
Awesome, Gareth. All right, before I let you go, you have a new website, Verified Investing in Cryptos. That's exciting. VerifiedInvestingCrypto.com. VerifiedInvestingCrypto.com. It's for those of you that like the crypto analysis. It's all technicals. I don't get into all the other nonsense. There's no FOMO. It's strictly looking at the charts of the different cryptocurrencies, mainly focusing on the top 10 and just giving out videos of analysis every day, charts, and trades when there are trades there. So again, come check it out, VerifiedInvestingCrypto.com. All right, excellent. And Gareth, good to see you back in the studio. We'll party again sometime down the line for sure. But for now, we're back. Thank you for your analysis today. Thank you for coming on.
Thank you so much, David. Have a wonderful day and weekend.
You too. And thank you for watching Kitco News. Don't forget to tune in next Wednesday at 3 p.m. for the live debate between Peter Schiff and Alex Mashinsky, hosted by Michelle McCory. Questions will be taken live, so don't forget to sign in on YouTube.